Today we explore why silver's next rally could be absolutely huge, so let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. So the first reason why we're set to see a potentially huge next rally in silver is because, as we've discussed previously on this channel, we're entering the world of financial repression. If we look at CPI inflation figures, we don't see much cause for concern. Yet if we actually break down where inflation is actually present, we can see it in amongst necessity items. Now, this Brookings Institution paper from 1980, following the period of dramatic inflation in the late 1970s and a significant silver rally, states that the inflation of the 1970s has been the most rapid in the prices of basic things that everybody needs: food, housing, energy, and medical care. As a result, inflation has been especially hard on poor and middle income families that spend most of their income on necessities. Personally, I see a very similar narrative playing out today. What's more is that the CPI inflation measurement has been altered almost beyond recognition of that which we saw in the 1980s. Thus, to some extent, the argument regarding inflation and deflation is a little bit of a red herring. As this excellent inflation chart from Shadow Stats tells us, the blue line represents the 1980 SGS alternate CPI measurement at the current CPIU measurement. From this vantage point, we can see that inflation is already eroding the wealth of the middle and lower classes. This is enormously positive for silver and, of course, gold, and the backdrop in the 1970s period saw silver dramatically outperform gold, of course. At the same time, we see the dramatic expansion in the money supply and the total assets of commercial banks, and also, of course, the need for further intervention by the Fed, which will see the balance sheet expand enormously as the economy stagnates. To that end, Deutsche Bank have already stated that they believe that the Fed's balance sheet will actually hit $20 trillion in the next few years. The correlation between metals prices and the Fed's balance sheet is enormously positive, of course. Meanwhile, the gold-silver ratio seems to be on the edge of what could be a big momentum change. It currently stands at around 77. We've already seen this ratio shift downward from an all-time high of 126 to 1 in March this year. More recently, the ratio hit 69 to 1, and while I anticipated a period of more intense volatility, we got a significant bounce off a key long-term support level at around 83.5 to 1. Indeed, this ratio at around 80 to 1 has long signified a relative undervaluation. I think it's fair to expect that any further moves higher in the gold-silver ratio are likely to be seen as primary buying opportunities, and this will help to actually mitigate the potential downside risk of silver. Will there be attacks and sudden drops in the price? Well, that has long been the game, and crucially, the informed understand this and seize upon such opportunities to load up. Silver's smaller market size and its tendency for speculative investment demand means that it will always outperform gold's moves up or down. And while we saw gold up 1.55% last week, silver moved up nearly 6% on the week. Now, this was nearly a 4 times increase in silver's prices versus that of gold. So let's say if gold was to move up around 14% in coming months and hit $2,200, it would seem entirely possible that we could equally expect silver prices to jump nearly 4 times that of gold's gains, which would give a percentage gain of just over 54%. With silver at $25.11, this would lead to a silver price of $38.75. At that point, we'd see a ratio of around 57 to 1. But if silver was to hit $44 with gold at $2,200, the ratio would hit 50 to 1. But well, we all know that nothing moves up in a straight line, and silver actually saw 4 corrections of 20% or more in the period from 2008 to 2011. The biggest of these saw a drawdown of a whopping 57% in the fall of 2008. And so the recent correction has been dramatic but is temporary. Meanwhile, other investors such as the excellent Gold Ventures has a measured target for the next cycle as $42 silver. As he points out, this was also the high of 1980, which sets up the cup and handle for thereafter. And of course, that long-term cup and handle is enormously bullish for silver, which on the face of it suggests a distinct possibility for 3-figure silver and the potential unrest which could require a full gold reset of the monetary system. But let's just add a little disclaimer here. As Peter Brandt says, charts do not predict prices. No form of technical analysis predicts prices. Charts suggest the path of least resistance. Charts provide a means as to determine the risk of a trade. Charts offer help in timing. And charts offer possibilities, not probabilities, and certainly not certainties. Yet we are unquestionably entering a period of dramatic uncertainty. Additional stimulus will certainly be coming, but Democrats are seemingly determined to prevent this from occurring prior to the election. And then the possibility of further social unrest following the election means we may well see more volatility in the immediate future. Yet those macroeconomic fundamentals are so significant, and this is driving tremendous investment demand towards precious metals, as we can see in this chart, which highlights the silver investor index against that of the silver price. This is tremendously bullish. And just to put this increased investment demand into context, silver investor demand increased just 0.4% in 2019 over 2018. Meanwhile, 2020 to date has seen investment demand soar by 12% or 186 million ounces. From this vantage point, we can easily determine that silver is once again highlighting its distinct monetary characteristics, as we had previously discussed in this video. And so has silver now broken out? Well, after a very volatile week and a massive gain on Friday, it seems too early to tell just yet. Certainly a big push above $26 is likely to be needed to really confirm this. But with so much uncertainty and market manipulation, who can honestly say short term what is actually going to take place? What we do know is that history and human behaviour is repeating. As we see the government's quest for stagflate, tax and liars, Wall Street for Main Street says, we appear on the edge of a definitive new move for metals. Thanks so much for watching. Please do consider subscribing and do check out these videos on the screen right now. And I look forward to seeing you next time. Bye bye.